Gonna go live here with Steve Schenkel. Let's see here. Home Funding Corp. There he is.
It works.
It works. It's a miracle.
It is.
How you doing today?
I'm good. I'm good. And you?
I'm always good. God's good. We woke up today, right?
Yeah. So hey, we're going to make a little adjustment here. Just give me a second.
Yep.
Okay. So, getting close to the holidays. Been talking to a lot of people about business, and there's a lot of people in our business who don't seem to be terribly happy about the state of things. And I'm just not one to dwell on the negative.
Right. Yeah, and that's the one thing I wanted to talk to you about today is, you've been in the business 40 years. So
Right.
you've seen ups, downs, coming back. And well, why do you think it's a good time to buy a home right now? Because I think it is.
I've seen this happen over and over again.
Mm-hmm.
When the situation gets a little tough, people quit working. And well, how could anybody buy a house? The interest rates are too high. Oh, woe is me. What are we going to do? So I just had this week. I was actually into last week. A client who we've been trying to get in a house for about 2 years. He works for Cal Fire. They're the ones who, when the forest fires or brush fires, they go all over the state and they put them out. And so for a while there, we had quite a few fires, and he just wasn't available. And now, we had this rain last week. Now we're ready to go, and he's saying, well, the rates are too high. I figured my payment, it would be $600 more than it would have been if I would have bought a year ago, and so forth and so on. And so I talked to my agent, started looking. First of all, the houses he's looking at a year ago were 100,000 higher than what they are right now. And so we got, did you factor that in, and so I put this whole presentation for him, and I'm waiting to hear back, but it was good timing for this call because I can use the data that I got for the call to talk about him. But first of all, before we get down to his things, I put some bullet points on why it's a good time to buy. Okay.
Mm-hmm. Mm-hmm.
I did a comparison between now and 12 months ago. So right now prices are down. Okay. The people that need to sell are going to do what they have to do to sell.
Mm-hmm.
And if someone is their job transferred across the country, they don't really have a lot of options but to lower the price until somebody buys it. Okay. And in some cases, we're seeing some very drastic reductions. There's also, people for various reasons, they have no choice and they have to move. And so they're going to do whatever they have to do. That includes paying closing costs. Last year at this time, nobody's paying closing costs.
Yeah, nobody. Mm-hmm.
Listings right now are plentiful. There are so many listings. It's ridiculous. And last year at this time, people would sit there and wait by the computer for one to come on the market, and then they all jump on it. And then all of a sudden there'd be 40 offers on that listing, and unless way more than what the asking price was, nobody got it. So the prices were driven up ridiculously high. Now they've come down back to what it would have been listed at in less in a lot of cases. And so it's really kind of a bargain right now as far as the sales prices go. The other issue, sellers are willing to pay closing costs. A year ago, nobody would pay anything. I mean, if you had coming up to say, too bad, if you want to make an offer on it, it was like, who wanted to deal with that? I had a lot of clients who gave up last year. They wrote offer after offer after offer. Nothing happened. They got beat out every time. They just said, you know what, we just don't want to do this anymore. And so some of those people still haven't gotten in the game. And I'll be reaching out to them saying, hey, it's a good time to buy. And here's why. We tell them exactly what I'm telling you here now. So the one negative is the rates are higher now. But if the rates are higher and the sales price is less, does that make it a worse time? Or does that make it a better time?
It's depending on what the numbers say, right? I mean, every individual is different, right? I mean,
and so the example of this firefighter guy,
mm-hmm.
he is looking at a house that's listed, or my agent, I guess, expects it to go for 430 because no, now right now nobody's offering asking price.
Hmm.
You know, especially what I would do in a situation like this, I wouldn't even look at a house that hadn't been on the market 3 months. We
Yeah.
want good and motivated, you know. And if you just hit the MLS, that's not the one you want to make an offer on. You know, let's look at the ones that have been around a while. So her agent, who's been around as long as I have, and she feels like the sale price will be about 430. And she also commented out what they were going for last year at this time, and they're going about 100 more, about 530.
Yeah. That sounds right.
And so what I did, and this is out in Riverside County. So
Hmm.
so what I did was I figured out what it would be right now. I was able to get. We're going to talk about interest rates in a few minutes, but
Hmm.
we had a little bit of dip last week rates, and I was able to get 6 and 5/8 if I were to do it today on a
Wow.
loan, which it's better than it was. It's not horrible. And then people say, well, I'm going to wait, you know, to rate get back down to the threes. Well, I don't think we're going to see that. You know,
Yeah.
my best guess is that if inflation turns around, and you know things cool off, that we'll maybe get down to five, maybe 5.5. And
Right.
a lot of my career, I was in the fives and did, you know, great.
Yeah.
And you know what's a good interest rate? A good interest rate is an interest rate that you can afford. When I first got in the business in 1978, I was selling houses before I got into mortgages, and the interest rate was 9 3/4 on an FHA. We thought
Wow.
that was great.
Right.
And of course, in '81, we had a market kind of like what we're in today. Not today's isn't as bad as that was, but we eventually got up to 18%,
Hmm.
and you know that kind of stopped everything. But 10% was fine then. So I'm not saying why isn't 10% fine now. I mean, I do kind of understand it that the prices have gone up enough that nobody could probably afford 10%,
Right.
but they probably can afford five or maybe even 6 and 5/8, like we're talking about, you know, here today. And so I did the math on this, and if we took um, this house and went with a 6 and 5/8 today at 430,000, the PITI payment came out to 3530. Okay,
Hmm.
so then I said, okay, well let's look at we first of all we know beyond a shadow of a doubt that there's still pent up demand for housing. There's not enough houses. Rent while housing prices have dropped, rent has not dropped.
No.
Rent going up, and so that puts more pressure. And a lot of people see the numbers, and they feel like, well, I can't afford it, or I don't want my payment that high, or you know whatever. And so I went back to what do I think rates will do, and if rates drop, of course we know the prices go back up. So extrapolating and saying, okay, so that house went back to 530, but the rate was 5%. Figuring that the payment would be 38. You're talking about roughly $250 cheaper now than what it would be if we wait till things went back up and the rates dropped. And so that is one of the reasons I'm saying it's a good time to buy right now, because you know you can get in for a payment that wouldn't be all that much different than what it would have been last year because of the lower prices that you can get the same house for. And as an added bonus, let's say you get in at the 6 and 5/8, rates get back down to five, then we refi you. Now you have a lower payment. You have really the best of both worlds. And so rather than, you know, focusing on the negative, you know, let's focus on the positive. You know, there are people out there who can afford to get in. Imagine having the pick of any house you want.
Right.
I mean,
Right.
this
Right.
we're going. Is the house? Is it available? Okay, I want it. You know, do you want to see it? No, I don't care. Just put my offer in. And you know, now they can go. Well, I like. No, I don't like this. Let's go on to the next one. You know, what a luxury. And
I
so,
always told my clients that Christmas time, holiday time is the best time to buy.
yeah,
And I put a few people in some great homes this last time around, and there's no competition. That's like half the battle,
yeah.
right? The
But
competition.
it's the thing is one of the reasons you and I are doing this, and we talked about doing this, is because you know people get fixated on things. If all you think about is the interest rate, then basically you're going to talk yourself out of buying a house. When you know, well, what does the interest rate mean? What do the numbers actually look like? Can I afford this? Do I qualify for this? Those are the questions you ask, and if those are all an affirmative, then why not buy? You know,
Right.
why not buy?
Right.
Why not buy when it's easy? I mean, it was hard. So people were so frustrated last year, and you know, we really last 2 or 3 years, and somebody I talked to, they just said, that's it, we've had it, we're not doing this anymore, you know. And I'm sick of writing offer after offer after offer, and falling in love with a house, and then somebody else gets it, and that
And I was in the middle of all that. You know that I was in the middle of all that,
yeah,
and I mean, not only the cash offer that I had to use, but I had to pull people in my network and utilize my network to win deals and do whatever it took. And it was, I mean,
yeah,
24/7. I mean,
yeah,
I had to pull strings, and it was extremely difficult, bidding wars. And
right,
yeah, and for people to use our cash too, we had to charge for it. It wasn't free,
sure.
right? So you won't have to have that charge either. You won't have to be.
They didn't care about that. It was just give me the house. Well, now all of a sudden it's, the interest rate is too high. Well, it's all relative.
Yeah,
Think is historically in my 41 years, where we're at today is not high. It's kind
yeah,
of, and so that's the mindset I think we need to adopt. Is what are the payments? How much down do I need? What's my closing costs? Do I have enough money? Let's focus on those things. Will the seller pay closing costs? And
yeah. I remember not too long ago, 6-7% was what a paper, people would dream of.
yeah,
Now it's like,
absolutely. Well, after the 18%, we refied the same people over and over again for about 10 years until rates got sixes, and it'd be like, oh, look, so-and-so's back, So
just keep lowering the payments. Who doesn't want a lower payment, right? I
yeah,
mean,
exactly. So, and yeah, it was a nice gig. I'd love to get back into that again.
right.
So I wanted to switch gears on us here and just talk about the rates. So,
Sure. How are they going now?
That don't know it, what's been driving the interest rates for the most part is inflation. Okay, and unfortunately, the only thing that really stops inflation is, for the most part, higher interest rates. Okay, now I think part of the inflation has to do with the price of gas, and we've seen that drop. But also, from what we can see, when the CPI numbers came out last Thursday, there was a modest drop. The core inflation, in terms of how much it went up from the previous month, they were looking for a number of 0.5%, and it came out at 0.3. And the market had an immediate reaction, and we saw the rates dip down a little bit. We dropped almost a quarter on the interest rates, and then it's leveled off again. But that's really, really good. But the problem is the Fed say, well, okay, maybe that's just a blip. We're not doing anything until we see what happens next month, and then from there we may talk about easing. And so really until this time next month, we won't really know, if that's going to help or not. But we have seen. And then the overall inflation year over year had been running over 8%, 8.2, 8.3, and as of the numbers last month, it was 7.7. So those are really positive signs. And the problem is the government's not going to do anything on a 1 month basis. But we get 2 or 3 of those strung together in a row, then we could see a lot of interest rates, and it's going to go up. If it were to go down, it would go down as slow as it went up. It won't be quickly. They're going to take their time. But looking at things, we see that the price of used cars, for one thing, is dropping tremendously. In fact, there's from everything I've seen, I actually want to buy a used car, and from what I understand, the bubble has popped, and the wholesale prices of used cars is tumbling like crazy. It hasn't gotten to the dealerships yet, but probably January, February it will. And I don't know if anybody knows, if you looked at used cars, they went up about 40% from what they were, say, a year ago. And so that was a big deal. And the main reason they went up because there were no new cars. Right. Well, now the new cars are starting to come in, and so that's that. And then the other thing that happened, from what I understand, is the stimulus money that we were given as a part of COVID. A lot of people went out and put that as a down payment on a car, and now they can't make those payments, and so the foreclosures are going through the roof on those cars that were bought back then, both new cars and used cars. From what I understand, clothing is going down. Certain medical services are going down. So if we get and then gas, we've seen in the last 30 days probably about an 80 cent a gallon decrease in the price of gas, at least here in California. I don't know about other states. And so gas is the big driving force on inflation, because you got to transport everything, and if everything costs you more to get there, then you're going to pass that along to the consumer. So now, if the price of gas drops, and unfortunately diesel fuel following. That's a bigger one. Hopefully that will happen. And if we could see consistent drop in the price of gas and diesel, we would see that across the board, and we would see inflation ease, and then we could get back to where we were. Prices going up too fast on the houses. So
Yeah,
there's
that
another
was.
reason why it's a good time to buy right now.
It totally is. I mean, so Steve, you've been in the business for 40 years, right? Am I right on that? You said 45?
41, 41.
41. Okay, 41. No one has a magic crystal ball. What do you predict or think that what might happen in the next couple years, 3 years, 4 years?
Rates will ease, but that we're never going to get down to 2.5 or 3.5% again. We're never. Yeah. When we got down there, I didn't believe it. I was wake up and realize
you scored me one. You got me.
I know.
It's unbelievable.
But we had no inflation, and we had a kind of recessionary stuff going on, and so that was what they needed to stir up the economy. But I mean, the likelihood, especially since we've had this inflation now, of that returning in the near future, I just don't see it. I just see it easing. I really think rates will settle once things get better, maybe like 5%, maybe 5.5%, and we'll all get used to those rates, and then it's fine. Once you get used to it, it's good.
How high do you think we'll go?
I think we might have peaked out.
You think so?
Well, once the CPI numbers come out next month, we'll know for sure. But if they can, then I think we peaked out.
Got it.
But every now and then I'm wrong, so we'll see.
Yeah, I mean, like you said, in my opinion, every time is a good time to buy. I mean, look, everybody's situation is different. There's always somebody moving. There's always a divorce, a death, unfortunately. And like you said, too, there is not enough housing, especially here in California. And that already, the supply and the demand is way off. So I think there's always a good time. And it's going to come back, and it's going to go higher, right? And I've already proven that, and I bought during the worst time. Well, supposedly during the worst time during the pandemic. Yeah, and I've done well.
Continue going up even after you bought it.
Right, and you're paying into it. I mean, it's depending on how you're utilizing a house, but you can utilize a house for many different things. You could be an income property. You could have your primary residence. It's your piggy bank. That's how I look at it, right? Like, you're paying down the mortgage, and over time it's going to increase in equity, and you can do things with it. So I feel like that's better than a 401k. Some people might disagree with me, but a lot of people lost $100,000 or more in their 401ks this last time around. So
I pulled mine out after about losing 20% of it and put it in a money market level, but I could have too. And then when it hits bottom, then I'm going to go back in, and then hopefully it'll go crazy. But yeah, that's it.
Right. Right.
So, anyway, so I got more things to talk about, but not today. I want to keep these kind of short. But if you're listening, it's a good time to buy. Call Eric and let him get you in a house.
Let's win it for you. You won't have to have a competition. I mean, like I said, I've won our clients' homes last Christmas time, right? And that's because a lot of agents are sleeping too. I mean, sometimes I got to do their job for them to make the deal happen, right? But we do whatever it takes here.
It's, people made good money the last couple of years. So they got money in the bank that are in our business, that is. And, when it gets like this, it's you got to work when it's like this. It's harder work, and they don't want to do it. So, but we do. We're here to work. That's what we do.
Well, we're ready to roll up our sleeves, and I really appreciate you, Steve, for coming on. We're going to do many more of these, and we're going to change a lot of people's lives. And I honestly, like I told you, I really think like you're the genius mortgage guy. I mean, you make the hardest deals happen. You tell the truth. You let people know if you can't do their situation, and most importantly, you get results. So that's why you're the best in the business, in my opinion. You got 40 years to back it up, and you can do things that nobody else can do. Certain things and provisions and underwriting. I mean, all these creative programs, and we're gonna over time explain these to people and help as many people as we can.
That's right. So, okay, well, we'll see you next time then.
It's a pleasure. God bless you. Talk to you soon.
Okay, bye.
All right.